Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for October 13th, 2022. Hat tip to Constantine for uh, what call the Cascade trade, a PSAR flip and standard risk box, and nicely played exit on a symbol that he is focusing on, specializing on, framing in a professional way, and managing in a professionally relaxed, almost disinterested manner. Finds the mover. He's got a symbol that moves in this characteristic way that he's able to frame and exploit. Finds the movers. He's not trying to make it work, he's letting it work. So yesterday we talked about today being a most likely a fireworks day, and we sure got it. I hope you were prepared for that move. This was yesterday's close. This was today's gap open we're on the 30-minute chart right now with a 1-day, 5-day, and 10-day look back. And then after this little gap down, which drove a new 150-day low, it did nothing but move up intraday 5% to the peak, then close near the top. Now, if you see the market doing that, you should be getting a major portion of that move. If you're not seeing the market doing that, then you should be looking at the market. If you see it doing that and you're not getting a major portion of that move, then you need to revisit the meaning of the PSARs and the simplified sniper framework, because it leads you exactly into getting those kinds of moves, which we'll see on the sniper trade of the day. This was a move that did not surprise us. The direction, of course, is a coin flip, but that was a move for us to catch today. So here was yesterday's close. Here was the gap down. There was the immediate reversal through yesterday's range, all the way up into the dragon and closed at the top of the day. That's a 5% move. All it has done is bring this right back into the same support level where it's been monkeying around before. So this was pure tactical trade, enormous 1-day range, very large 5-day range. So the Godzilla is still in place. This is what happens in Godzilla moves. The 5-day range is almost identical to the 10-day range. So we know we're still in Godzilla. It has to get above the skin of the dragon, and then the PSAR, or I'm sorry, the peak of the RL10, and then the 10-day high to become interesting. It has to get above 380. If it does that, then really the next target is up in this vicinity around 400. So this is a vast range of opportunity up in here. It has to get through that tactical trade. Otherwise, this is just a 1-day anomaly buying the sell-off and collecting all of the inventory for people that had really tight stops. So tomorrow should be another major follow-through day in the second day of a Godzilla breakout. Looked in the context of the 150-day look back, you can see the size of the 5-day range here is about, at least a third of this 30-day range, but it's almost half of these other 30-day ranges. That's how big that's how big the 5-day range is. So extraordinary volatility, right at the bottom um, of the. It made a new 150-day low. It left behind the previous low before. So this little sell-off is even bigger than the rebound was, and it's lasted just as long. And this second leg down here is still in play until we can see something above. I'm going to call it above 380. So otherwise, this is just a dead cat bounce until proven otherwise. Change my mind, market. Market performances, the sector performance, I should say. So the S&P here, our baseline was up 2.6. Diamonds were the best at 2.88. The Russell, 2.5. The Qs, 2.35. Disappointing that tech was lagging and that the large caps were winning. That's an indication of broad index buying from the plunge protection team. Emerging markets limped in at 0.29, and treasuries gave back another percent to close below 100. Tesla lagged the broader market, so that was unpersuasive at 2%. Let's take a look at the outperformers, because I'm actually more worried about the downside than otherwise. So here's the break even between gains and losses right here at the red line. So the S&P at 2.5. You had materials, tech, oil exploration, energy, and finance. And notice that the S&P tech at 3.1% outperformed NASDAQ tech 2.35. That's another way that you know this was index buying in the S&P driving most of this. Materials, oil exploration, energy, finance at 4%. Individual companies, Intel 4.3. Devon Energy 4.1. Nvidia 4%. Microsoft 3.7. Apple at 3.3. So this is your conservative tech winners right there. Otherwise, you get Devon Energy at 4.1, U.S. Steel 2.7, Alcoa 2.56. So some bellwether names in there. That's conservative tech. To the downside, let's see what we have here. S&P 2.6. So we had wood and the other lumber 2% and 2.36. Simon Property Group, commercial real estate, oil, the FANGs, the other lumber between 2.3 and 2.1. Uranium and clean energy 1.9. Big cluster here of biotech, staples, real estate, Bitcoin, marijuana, blended commodities, lithium, and discretionary between 1.7 and 1. And all of those dramatically underperforming the S&P itself. So all the specialties were lagging today. It was only the big money, tech, energy, that dominated today. Brazil 0.67, Aussie dollar 0.37, Mexico 0.28. Individual companies, U.S. Steel, Alcoa, Texas Instruments, Cliff underperforming, Rivian underperforming, PayPal and Squarespace underperforming, Robinhood, Coinbase underperforming. And now your real underperformers here, all the cryptos, ARC Genomics and ARC Innovation getting smashed. So this was one-day index buying. Don't get carried away, but be ready for another tactical day tomorrow where you might see the S&P really race up in the morning to try to capitalize on selling into the fear of missing out. So everybody that didn't buy today might be tempted to buy indexes tomorrow. So the fear of missing out would drive up the price they're willing to pay. So everybody that bought inventory early this morning on the gap down can just be selling into all of that psycho buying pressure. And then in the afternoon, the buying disappears and the price collapses. So I would not be surprised to see a gap up and then a bunch of people paying top dollar for this market, and then watching the volume dry up and the bid dry up and watching price collapse in the afternoon going into the weekend. So that would be unsurprising. All right, this is why I say we should have had this move today. Here's our sniper trade. This is in the S&P itself. So here's our gap down. Here's yesterday's close. Big gap down. OR3. Breakout to the upside. You think it can get to the closure of the gap. So we play that with a standard risk box and standard exit. That gives you 1 unit of risk. 1, 2. So that should have been 2R right off the bat. You might have added a second position here because you had 2R in hand and you'd have gotten a little piece. Kata 2, standard risk box. Could have had on the break of the resistance a second entry there. This little peak, if you sold off into here, I'm not offended. I was trusting the PSAR. That's a theme for today. I would not have been offended with an exit on this rollover at 1, 2, 3. That's basically the same exit you get if you just follow the risk box or the PSAR. So this one was 2. This one is unit of risk. So you get 1, 2, 3, 4, 5, 6 on standard risk, standard rules, no second positions. So that's 8 in the market itself. Kata 2, standard exit for 2 more. So now that's plus 12. Kata 2 for another 1. So that's plus 13. So that's nothing but standard work right there. There is nothing abnormal about that. And that's using the R10. Straightforward, right by the numbers. On a day where we were anticipating a fireworks kind of a rocket ship kind of a move, while the whole market is in Godzilla. I mean, you have to capitalize on moves like that with no overnight risk. No beliefs carrying forward. Only the fact that today was such a large move that tomorrow there's an implied volatility to that. So I'll be ready to trade it right from the gap. All right, let's go to Dashboard 1. We are back into bearish volatile, and that huge move pulls the 10-day and the 2-day higher. We are still in risk off. It is starting to resolve itself towards the upside of long side swings. You've got some Alcoa, Chevron, Johnson & Johnson in the min pains. Max pains remains Tesla. I like the fact that Microsoft and Intel were big today and are still max pains, because that means that old school, conventional, traditional tech has some room to run still. It's no surprise that on a day where such enormous range, there's no dojis and you can't find an auto framer with the exception of Tesla and Microsoft. I take the Tesla as a real opportunity here. There was a break to the upside in Chevron, Caterpillar, big upside move in McDonald's, 155. Woo. Merck had a good day. Travelers had a good day. These are easy to believe in for tomorrow. Pure momentum. ETFs are in similar conditions. No dojis. A few more auto framers in the globals here, right? But no breakouts. Big winners: energy, finance, and oil exploration. The globals were laggards today. Tomorrow it's going to be all about the S&P and the Russell. Standard auto framers and no squeezes today. The Godzillas executed today and are mostly off their bottom so much that it's no longer dramatically oversold. But the Godzilla did his job yesterday for sure, and had us prepared for today's huge moves. Still got Ethereum and Tesla in the tactical symbol set for Godzilla. I'm mostly interested in the first column, the one-day movers. Here's a 7 sigma move, another 6.5 and 7. Applied materials in the semiconductor space. Intel, big time move, 5.5 sigma. McDonald's and DuPont, 5.3. JP Morgan and Travelers. This is major companies moving that far. That's index buying in a nutshell. Looking at the sniper stats for the tactical symbol set. Texas Instruments. I like that. Emerging markets and Microsoft, like that. The S&P and tech. That's where your strength is. Those are the ones I'm looking at for momentum. The haves, like Chevron, got large today. Merck also very, very strong. Devon Energy and Exxon Mobil. Those are the no-brainers. Energy sector huge today. Oil not bad. So just framing out opportunities for Momentum tomorrow. One day dead cat bounce. So far, turning point here on the slope and the percent stretch, finding support right where we would not be surprised if it held support there. And it's everything I want to cover on the daily. Take a quick look at the traders today. Z3 pinches, fake 1, go 10, PSAR flip, standard risk, 8.5R. Respect the PSAR. Looks like a red Niagara, Bob Gardner used to call that, or the Cascade trade. That's what happens on collapsing dragons. And what I want to show also here is that even if you don't get this, you've got to get this. And if you don't get that, you've got to get that. I would not be offended with a 1, 2, 3 exit right around in here instead of suffering through all this. Nolan. Yep, we're not sure what that is. Here's a Z3 pinch breakout. I'm not sure why we're exiting here. And if you're going to be that tight, then you got to re-enter here and get all of that. That's 2R just to there. And then here's the PSAR flip here. And respect the PSAR and exit up here. Still, we'll take home 2R. Or respect the bottom of the dragon and get out here. Or respect the spine of the dragon and get out here. And instead of this, get all of that. And if that's 1R, that's an extra 1, 2, 3. Z3 pinch breakout here with the standard wrist box. Respect the PSAR exit here. This is still pretty good as a Kata 2. I'm not offended by that. Great re-entry. Great exit. There's our entry. There's another entry, and then should be exiting here. This is a great PSAR flip break. On this one, rocketed back to here. When this rolls over, you can get back in here or here and still get the same size move that you did there, which was 5. You'd have picked up another 5 with just a simple money management re-entry. Know what the size of your wrist box is, and when that thing rockets up and starts rolling over a second time, take that wrist box, hang it from the local top right in here, and then when it goes that far down, just get short again after a MMRB off of the observed pivot point right there. That'll give you another 5R. Woj crushing all opposition here. Bringing home 3. I would just... Can we get this? We should be able to get that. This is still good. Not much there. This... Okay, this is where you got in. That's when you started. Otherwise, it would have said, why aren't we short here and short here? This could be... I'd have probably stopped in reverse there and scratched. And then when this PSAR flipped, this. But then you had to short. If you're only going to be in there that long, I wouldn't even trade it, to be honest. Not worth the hassle. Although you brought home 3. Uh, Arch, I got to say here, respecting, you got to respect the PSAR more. If we take this PSAR flip, I don't. We probably have to get out here, so you get a little piece. Um, I just feel like we got chopped here on a beautiful long trend, and we didn't get any of it, and it cost us a lot of money. The scratch. This one, when you get the breakdown here and it immediately starts reversing, you're giving it way more benefit of the doubt when there's nothing coming to you. And then when you're holding that same size, when you're letting that dissipate and come all the way back here, be more aggressive getting out after a nice run up of probably 3R. Preserve the outside gain. I just think there was, you got to develop some trust in the PSAR to stop getting chopped like that. And all right, that's everything we got for today. I want you to be ready for tomorrow. Study and rehearse the SPY sniper trade from today. It's going to be massive tomorrow. You want to be looking at SPY or IWM or the NASDAQ. Take your pick. But that's going to be massive index moves tomorrow. All right, that's everything I got for today. We'll catch you tomorrow.